Happy Monday to you. Thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you. We're going to watch your ag commodity trade today on the grain and the livestock. Well, the futures trade will be opening up at the bottom of the hour. We did have some overnight trade, and for the most part, it seemed to be fairly firm. We can take a quick look at our overnight Globex trade real quickly and see what the corn and soybean trade was doing anyway. On the corn market, as we bring it up, it had very small gains overnight. Now it's about 2 1/4 higher on the last check at 361 3/4 as we got ready for the opening of the daytime session. The soybean trade overnight was just a touch firmer as well. We're now 5 higher on the last trade at 947. Wheat market was mixed overnight. In Chicago, the May was 3/4 higher at 424 3/4, and in the July up a penny. Kansas City, we had the May contract down a penny at 420 3/4, and in Minneapolis, spring wheat trade overnight unchanged at 518 1/4. Let's bring in Rich Nelson of Allendale Incorporated, and he's based in McHenry, Illinois. And Rich, what are you going to be keying in on the markets today, on the day before we get the next supply and demand reports here?
Obviously, we're going to be a little quiet here as far as the actual volume traded today, but we'll all be discussing these numbers ahead. Looks like in terms of corn, for our own estimate here for tomorrow's report, we're talking about a 32 million bushel increase. Excuse me. We're talking about a 20 million bushel increase. 2.340 billion bushels is our estimate here. Soybean numbers looks like a small increase there as well, going from maybe, in our case, about a mild 13 million bushel increase, 448 million bushels. Wheat numbers looks like, in this case, a very mild 11 million bushel increase there, 1.140 or 1.154 billion current estimate there. So general points here, looks like quiet trade, waiting for USDA to tell us a little more corn stocks here, but for the most part, I still would suggest that planning and weather and these type of issues will hold a larger sway here in the next few weeks here.
We did have some pre-report estimates when it comes to South American production, for example, like on Brazil corn, Argentina corn production, and also on the soybeans from each of those countries. So the average trade guess, based on a survey of analysts, had Brazil corn at 92.5 million metric tons, Argentina corn at 37.8, but in Brazil soybeans, they are forecasting 110 million metric tons. That's a big number. Argentina soybeans at 56 million. How does that compare to your in-house numbers there from Allendale?
You know, for our own estimates here for this particular report, we think USDA will take maybe a mild approach here, going from 108 million bushels last month to 109. I certainly will suggest that, yes, while the average guess calls for 110, it's very likely this crop may end up at this 111 mark on the Brazil soybean discussion here. And in fact, also Brazil corn, I think this push to 92.5 you're mentioning may actually end up in the next couple months to even 93, 93.5. So we will see some higher numbers. It probably will be a stair-step approach in our personal opinion here.
I think that's an important point that you bring up, where you actually think the actual number will be more like 111 million tons, but you think USDA will come out with maybe closer to 109. Am I reading that right here?
That's right. You know, I think for what they did last month, going from 104 to 108, pretty good jump and very valid. I mean, it certainly was needed. The only question for us, I think, is really how USDA handles these type of reports at this time of year here.
Okay, well, thanks for the input on that side. I can't wait to bring you back, and we'll get your thoughts on this livestock side as well. We're talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. Stay tuned. We'll be back with more right after this. Well, we're talking right now with Rich Nelson of Allendale Incorporated in McHenry, Illinois. Here's a look at our livestock summary as we wrapped up Friday's trade. And let's take a look here at the cash cattle market activity. Actually, the market as we wrapped up the week was down $1 to $2 on a live basis. It was steady to down 2 on a dress basis. Wrapped up around 122 to 126 in a fairly wide range on the live cattle trade. But we had a big surge in the cattle futures on Friday, Rich. We were well over $1 higher in all contracts, live cattle and feeder cattle, but we had the lean hog market going the other direction on Friday. So technically, let's sort these out here. Let's look at the cattle market first. Where does that put us? Have we brought in new buying here into the cattle market all of a sudden, or what is supporting it?
You know, based on those rumors here on Friday, as Trump met with the Chinese premier, I think in terms of the general trade focus right now, they did talk about China reopening their market to U.S. beef. And as a reminder to you guys, we actually do ship beef to China, but it's sent through the back door of Hong Kong. So we certainly could see some increased exports to China in the coming months. The question is when. As of right now, there's no official deal met, so we're not going to see exports increase as of tomorrow or the next day. But this is a bullish hope that maybe will give us maybe a little support here and cushion the blow of seasonal lower prices in the coming weeks.
The wholesale beef trade has been sagging for a couple of weeks straight here, and I believe we closed weaker again on Friday afternoon on the beef cutout values. Is that something that you think can stabilize and rebound anytime soon here?
You know, in terms of the beef side, we actually do get a seasonal tone of support as we get the warm weather buying. Usually that's maybe in about a week or two before we see some support on this end for the beef. What is a problem for us is while there is a seasonal increase in beef demand up ahead, we usually also have that overcome with a seasonal surge in offered cattle. So we can actually have, for a period of time, beef moving higher and cash cattle actually moving lower in the coming weeks. It's not going to stay that way forever, but certainly is something we do see occasionally here.
Well, with the U.S. dollar value over 101 now, and it was up a little bit overnight, but crude oil futures up a little more than that. But is that dollar coming into play when it comes to our meat trade here?
You know, it certainly can. And one thing we have to look at, especially when we're talking about that U.S. dollar, and we have to look at just our competitors and not necessarily the dollar index. What makes this a little confusing here is that dollar index is very heavily weighted towards the European Union, where we actually don't have any serious trade with them due to our beef hormone treatment. So in terms of our trade with our competitors, for instance, Brazil, now that Brazil is trying to get back on speed on that one, actually we're doing okay because Brazil had a serious, maybe a problem with their economy in the past couple of years that they're now recovering from. So on the U.S. trade, actually not that bad of an issue, especially now that Brazil is trying to get back on speed with their economy.
And as I say that, the dollar was just a touch firmer when I came into work, and now it's drifting a little bit lower, about 100 points lower. Rich, thanks so much for joining us today. Appreciate that a lot, and we'll talk more with the Allendale folks coming up later in the broadcast. Rich Nelson of Allendale in McHenry, Illinois.